In 2024, we saw house prices rise to an almost all-time high. But why? Why have house prices risen so much? Will house prices keep rising or fall in 2025? Should we be worried? In this video, I'm going to walk you through the facts so that you can decide this for yourself. And in case you don't know me, my name is Will Gale, and I've spent over 10 years building a UK-wide home buying company, British Home Buyers, a nationwide estate agency, British Home Sellers, and my own personal property portfolio. So not only does that give me some insider knowledge, but also making sure I read the market correctly is essential for both mine and my clients' success. I've broken this video down into 3 key sections. 1, why have house prices increased in 2024? 2, what could affect house prices in 2025? And finally 3, what are the house price forecasts right now for 2025? So let's get into it. Why have house prices increased so much in 2024? The Bank of England's base rate fell twice in 2024 from 5.25% to 4.75%, which definitely helped boost market activity. But just by how much? While lower base rates have some impact, mortgage rates didn't fall as significantly as we all hoped. According to Nationwide, the average 5-year fixed mortgage rate dropped by only 0.2%, leaving affordability still strained for most buyers. Meanwhile, house prices rose by 4.7%. So for context, in December 2023, the average house price was $257,000. By December 2024, it had risen to $269,000. So if you'd bought the average house a year ago, a 75% loan to value, 25-year mortgage at 4.9% would have cost you just over £1,100 a month. Today, with the higher price and slightly lower rate of 4.8%, the monthly payment is £1,170 there or thereabouts. Plus, you'd need roughly an extra £3,000 as a deposit. So despite the small drop in interest rates, affordability has not improved for first-time buyers. Lower rates really seem to benefit existing homeowners more by reducing our monthly repayments rather than helping new buyers enter the market afresh. This brings me to the affordability paradox. Interestingly, while affordability seems worse in real terms, the house price to earnings ratio has actually been improving. This ratio divides the average house price by the average salary, showing how many years worth of income it takes to buy a house. After spiking during COVID, the ratio is slowly falling back to pre-pandemic levels, thanks to rising wages. But of course, we all know buying property pre-COVID wasn't exactly easy. So the property market getting easier still means the property market is really hard for a lot of people. In reality, barely takes the edge off, I think. But let's talk about the real problem, the supply-demand disbalance. Before we dive into what could affect house prices in 2025, we need to address the elephant in the room, the chronic imbalance between supply and demand in the UK housing market. This imbalance is not new. It's been brewing for decades, but it continues to underpin house price growth, even in tough economic conditions we've all been facing over the last couple of years. The obvious issue is, 1, the lack of supply, and that's been driven by building shortfalls. The government has set a very ambitious target of 370,000 new homes a year. But in 2024, we built around 200,000 new homes, well below what's needed to meet target. In fact, the National Housing Federation estimates the government will fall behind by nearly 500,000 properties, almost a third of the target, without significant government support for social house building and first-time buyers in particular, which I'm sure is probably no surprise to you. But we are starting from a terrible starting position on all of this, to be to be frank. This graph shows the completion forecast released in May based on the policies of the previous government. You can see that new home completions were actually forecast to drop. So to turn the momentum on this is clearly no easy task. All the while you have the second issue, persistent demand. We have an ever-growing population, mostly driven by immigration. And the real issue with immigration, legal immigration, is it creates an immediate demand on housing stock. Whereas my wife and I have produced 2 new human beings to the population over the last few years, that hasn't put any pressure on housing stock because obviously our kids live with us. Of course, we also need to consider investor activity is still strong. A recent survey by Investec Bank found that 77% of individuals earning over £500,000 are looking to increase their UK property investments. In response, Investec themselves have launched a UK real estate equity investment strategy aiming to raise £250 million to acquire properties over the next couple of years. And they're not alone in this. Over 4.5 billion was invested in the build-to-rent sector last year, primarily by large private equity firms. Year after year, the sector is breaking records and attracting even more investment. So clearly, this all affects the supply-demand equation. What happens when demand consistently outstrips supply? Prices go up. Even with economic headwinds, this underlying imbalance cushions the market against dramatic crashes. It's why we've not had a house price crash in real price terms. Here's an analogy. Think of the UK housing market as a game of musical chairs. There are simply too many players, so buyers, and not enough chairs, so houses. Even if a few players decide to sit out because of recession or affordability issues, competition for chairs remains intense. And this is the situation we've been in over the last couple of years. So what could affect house prices into 2025? Several factors could shape the UK property market going into 2025, and they fall into 2 categories: economic shifts and government policies. So let's start with economic shifts. Interest rates, while we saw base rates drop in 2024, the Bank of England have already cited themselves that the Chancellor's most recent budget will add about 0.5% to inflation and slow their projections to hitting 2% target by about a year. And of course, recession fears. If the UK economy stumbles, job losses or reduced income growth could lead to less demand for housing, putting downward pressure on prices. And finally, global factors. The obvious economic uncertainty abroad, but importantly, President Trump, love him or hate him, he's clearly very focused on reducing the world's reliance on US capital. And so increases in tariffs, increases in NATO spending from Europe, all this stuff helps the US spend less, but ultimately puts more financial burden on European nations. In short, the US wants to pay less and Europe will probably pay more, is his aim. The second significant thing we need to consider is government policies. Stamp duty, of course. The zero rate threshold will drop from 250,000 to 125,000. And for first time buyers, the threshold is dropping from 425,000 to 300,000. Now, the reason this is important is whenever we see these sorts of upcoming changes, you get a flurry of activity as people race to buy and complete pre-April. And so you can see from this table, it shows monthly transaction volumes and how changes to stamp duty historically have always created big spikes in activity just before, with then drops after. So we're likely to have a very busy Q1 with a slowdown in Q2 and then a pickup again thereafter. The next key thing is, of course, the Renters Reform Bill. Landlords are facing tighter regulations, reduced profitability, increasing supply, and this is all going to increase the supply in the sales market. Landlords are right now selling more property than has ever been recorded in history. Rightmove reported recently that 18% of properties on the market right now are buy-to-let property, which is the highest level it has ever recorded. So, what are the house price forecasts for 2025? So what do the experts say about house prices in 2025? Not that they're often right, but the first is Nationwide Building Society. They've suggested that if interest rates remain stable, we might see modest price growth of around 2 to 4%. However, they warn that any economic shocks could reverse this trend. Secondly, Halifax, they predict a more cautious outlook, forecasting flat or slightly negative growth as affordability pressures weigh in more and more on the market. Thirdly, Savills, their long-term analysis points to regional disparities, which I think is completely right. So northern regions and Scotland may see growth, while London and South East could experience stagnation or even declines. And finally, the Office for Budget Responsibility, their projections align with moderate growth, but they emphasise that inflationary pressures could lead to a slowdown in demand. So what's my take on the market in 2025? Look, it's impossible to predict the future with certainty, we all know that, but here's what I believe based on the data. I think we're going to have short-term stability. I expect the market to stabilise in early 2025 as buyers and sellers adjust to the new normal of higher costs. I think opportunities for buyers are going to be there. If you've been waiting for price drops to significantly fall, you may not get what you wish there, but areas with high supply could present good purchasing opportunities. And challenges for investors, so landlords and property investors, are going to need to adapt their strategies, focusing on properties with higher yields or pivoting to different investment types like HMOs or commercial spaces, or of course just use less debt with investing, which is what a lot of our investors are doing. They're just using more cash, less debt. Ultimately, the property market is resilient, and while 2025 may not be a year of dramatic changes, staying informed and flexible will be key to navigating it successfully. I'll see you in the next video up here.